Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at Everything You Need to Know in 90 seconds at 9 o'clock, with news inflation is staying up in the US but retreating in India and Australia. The US inflation rate remained at 2.7% in July, the same as in June, and below forecasts of 2.8%. Still, it's worth noting that the June's level caused Trump to fire the bearer of that news, but the level hasn't been held anyway. Food prices were also steady at 2.9%. Meanwhile, core inflation, which excludes food and energy, accelerated to a 5-month high of 3.1%, compared to 2.9% in June and above forecasts of 3%. What today's inflation data means for the Fed rate cut is still uncertain, for some anyway. Equity markets, though, are betting this as expected result will allow one, and their bets are now 90% certain a cut will come on September the 18th. Bond markets are a bit more sceptical. Currency markets remain bearish on the US dollar. And the US government posted a $291 billion budget deficit in July, despite a $21 billion boost in border tariff collections from importers as spending outpaced revenues. The shortfall was $47 billion larger than a year earlier, with receipts rising 2%, but outlays jumping 10%. The unexpected worsening seems to have been ignored by the equity markets, who like the inflation result. But the bond market is bracing for the impact of an additional $500 billion in Treasury bond issuance over the next 6 months. Benchmark yields rose. In India, CPI inflation is retreating rapidly now, coming in July at only 1.6% from a year ago. In June, it rose 2.1%. The July level is almost as low as the all-time low of 1.5% in June 8 years ago. In the latest data, food prices deflated 1.8%, and this was by far the major reason for the overall easing. The result is now well below the Reserve Bank of India's inflation tolerance band of 2 to 6%, so official rate cutting may come into play. But arguing against that is the record weakness of the Indian rupee. In Australia, and in a unanimous decision, the 9-member Reserve Bank of Australia Monetary Policy Board has cut its cash rate target by 25 basis points to 3.6%. Most banks announced they would pass it on in full to home loan borrowers. Lower inflation tracks are behind the official rate cut there. And the US Treasury 10-year yield is now at 4.29%, up 2 basis points from yesterday at this time. And the price of gold will start today at $3,347 an ounce, down $7 from yesterday. American oil prices have softened 50 cents to be just under $63.50 a barrel, while the international Brent price is at $66 a barrel. And the Kiwi dollar is now just under 59.6 US cents, up 20 basis points from yesterday. Against the Aussie, we're up 10 basis points at 91.2 Australian cents, but against the euro, we're down 10 basis points at 51 euro cents. That all means our trade-weighted index starts today at just on 67.2 and unchanged from yesterday. You can get more news about the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.